If you think back to the 2021 Bitcoin bull run, most influencers were still confidently calling for higher prices even as the top approached. That's not a criticism. Tops rarely feel like tops until hindsight confirms it. The only way to avoid being caught off guard is to have a clear exit strategy and remain open to multiple scenarios. Over the past year, I've shared data and signals pointing toward a lengthening cycle, with the possibility of this rally stretching into 2026. But today, we're going to explore an alternative view, gaining attention the possibility of an October top. I'll break down the reasoning, share my perspective, and compare the monetary conditions around past Bitcoin cycle peaks. If you enjoy grounded, no hype content like this, hit that like button, and if you're new here, subscribe so you don't miss future updates. Let's dive in. I've often said this cycle could stretch into late 2025 or early 2026. That's still my leaning. But there's a growing argument that Bitcoin might already be entering its final stretch. This thesis is based on two main approaches. Bitcoin historically peaks 17 to 18 months after each halving. The most recent halving was April 15, 2024, projecting a potential top around October 2025. Past cycles support this. Previous peaks were followed by roughly 11-month bear markets, bottoming around a year after the peak. If history rhymes, we could see the same timing this cycle. Supporters of this approach argue the bull market starts not at the halving, but at the capitulation bottom when the market is fully fleshed out. Measuring from bottom to peak shows surprising consistency across cycles. First major run, approximately 25 months. Second, approximately 28 to 35 months, depending on double bottom interpretation. Third, approximately 35 months. The last two cycles peaked almost exactly 35 months after their market bottoms. Both approaches halving-to-top and bottom-to-top converge on roughly October 2025. Here's where it gets interesting. Past models may not fully apply this cycle. Bitcoin's trajectory has always been tied to global liquidity conditions. Peaks historically align with major liquidity shifts. 2013, post-GFC, central banks cut rates near zero, injected liquidity via QE, and Bitcoin surged to $1,000. The first taper tantrum sent BTC tumbling. 2017, low rates and steady liquidity injections fueled a run to nearly $20,000. The top coincided with Fed rate hikes. 2021, pandemic stimulus, near zero rates, and massive liquidity fueled the $69,000 peak. The top aligned with Fed taper announcements. This cycle is different. We haven't yet entered the easy money phase. Monetary conditions remain tight. The Fed's 4.25 to 4.5% rates, along with ongoing QT. Mean liquidity-driven peaks aren't here yet. Quantitative easing is still ahead, with balance sheet normalization expected to flatten only by mid-2026. Bitcoin today isn't the same asset it was in the Wild West days pre-ETF approval. Structural shifts since January 2024 are profound. ETFs. Bitcoin ETFs have attracted $50 billion plus in 2025. BlackRock's IBIT alone holds $80 billion, corporate treasuries and pension funds. MicroStrategy holds over 600,000 BTC tilled $70 billion. Sovereign adoption. Countries like El Salvador and Bhutan are building Bitcoin reserves. These long-term holders create a floor that didn't exist before. Flash crashes that previously shook retail investors are less common because strategic, institutional accumulation dominates market dynamics. The liquidity boost that drove previous Bitcoin rallies hasn't even started. When central banks eventually shift toward accommodative policy and QE returns, fresh liquidity could flow into a market already constrained by institutional supply locks. Add in potential regulatory tailwinds for 101k and retirement fund access to crypto, stablecoin legislation, expansion of sovereign Bitcoin reserves. All these factors create structural tailwinds unlike anything seen in prior cycles. While percentage gains in Bitcoin cycles have been decreasing with each iteration, the depth of market maturity and institutionalization changes the dynamics. Past cycles, retail-driven, extreme euphoria followed by 70 to 80% drawdowns. Current cycle, strategic accumulation by long-term holders, creating a more stable floor. Bitcoin doesn't need brutal crashes to reset anymore. Consolidation and digestion of gains can now occur alongside continued upward momentum. Even when historical models point to an October top, technicals show that this cycle may behave differently. Institutional accumulation reduces false crashes. Stablecoin inflows are elevated. BTC dominance remains below critical thresholds, supporting altcoin rotation. Exchange balances for major altcoins are at multi-year lows, indicating structural scarcity. This confluence of technical, fundamental, and macro factors points to a more extended, steady bull run. The October top thesis assumes the market will follow traditional cycle timing. I believe this is fighting the last war. The market is now dominated by institutional accumulation, strategic mandates, macro tailwinds still in development. Applying old patterns may underestimate the potential for a cycle that stretches into 2026. Retail-driven volatility is reduced. Institutional adoption adds stability. Monetary easing hasn't begun, suggesting the liquidity wave is still ahead. I'm leaning heavily toward an extended cycle into 2026. Bitcoin now operates on a fundamentally transformed market structure. Strategic accumulation, institutional adoption, and macro tailwinds create a runway for continued growth. The October top thesis may be appealing for those anchored to historical patterns, but the market today is fundamentally different. The next cycle may surprise everyone with its steadiness and persistence. What's your take? Are you preparing for an October peak and crash? Or do you believe in an extended cycle stretching into 2026? Drop your thoughts in the comments. I love reading your perspectives. If this breakdown helped you evaluate the competing views, hit that like button and subscribe for more grounded, data-driven crypto analysis. No hype, just insights. Thanks for watching, and I'll see you in the next update.